Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, November the 21st. I want to take just a brief minute to discuss what markets did last week, as it was a down week in the markets last week after the post-election rally that we saw. And it's not surprising after such a reaction to the upside that you would have a little profit taking coming off of that week. So the S&P 500 for the week was down 2.08%. The mid cap index was down 2.72%, and the small caps as measured by the S&P 600 were down the worst, down 3.4%. Again, not surprising, as they were the outperformers the week before. And so as we moved into this week, all eyes this week have been on what is NVIDIA's report going to be for the market, and what are they going to come out with. Are they going to beat? What's the guidance going to be? Is the guidance going to be acceptable? What does the momentum look like for NVIDIA? And we got those results last night, and they were phenomenal results. Not only was it a big beat, guidance beat expectations, and it really showed the momentum is still there for the AI, and we may just be scratching the very early innings of AI. And that momentum in the stock market and the productivity that can come from that. And so that really settled the market down. And so as we're sitting here today, we're rallying a little bit in the markets on Thursday, but we're still up about 25% right now year to date in the S&P 500. Last year we were up 24% on the S&P 500. And so as we're heading into next year and as we're navigating this time, I wanted to let you know that we do expect some volatility. The money flows that we follow have turned negative, which is an indication of more selling pressure in the market than there is buying pressure in the market, which is an indication that we could see potentially more volatility, and that volatility leaning more biased to the downside, not the upside. Now, we're not saying go run for the hills or anything like that, but if you have something that's had a nice run up, it would not be a bad idea to take some profits here, take some cash and put it on the sides and have it as dry powder if we do in fact get that pullback, because the market's not going to continue to move upwards straight like that forever. It's just law of averages. It's not done that historically. We will be at some point due for a very healthy and normal correction and pullback in the equity markets. And so you want some dry powder on the sideline to be able to pounce and buy some things that you've wanted to buy that maybe you just missed because they've had a nice run up to the upside. So we really do see some volatility there on the technical side. And then as we move forward on more macro, that we still have the geopolitical risks. We still have the war in the Middle East that's going on. We still have the war in Russia and Ukraine, and it looks like the war in Russia and Ukraine might even be escalating a little bit. And so those are worries that we still have to look for in the market, as well as the new administration coming in. We're still learning what the policies may or may not be. We don't know what direction yet that's going to look like. So as the market, it's just uncertainty, and the market doesn't always like uncertainty. They want clarification and they want to know which way we're going. So that's leading to us to believe that we might see some volatility here, and that's okay. So if you're needing cash, go ahead and raise a little bit of cash right now, or if you have some nice profits, it's okay to lock some in and leave some cash on the sidelines. That's what we've done here at River Place. So if you have questions about how to navigate these times or how we can help you in any way, feel free to give us a call. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.